Hi traders, it's Roberto. In this tutorial, we're going to be focusing on three things: pivot points, Ichimoku Indicator, and price action. Ichimoku Indicator is an excellent indicator to use for directional bias. And let me explain how to use it. And there's so much information in these lines that you see, and also this cloud on the bottom. We're looking at a 1 hour chart. So the first thing I do is I'll look at the 1 hour chart, and if price is above the candle, or I'm sorry, if price of these candles is above the cloud, then we're obviously in an uptrend. Then I'll go to the 4 hour chart. What I'm looking for is consistency. I'm looking for each time frames that I see the same thing on. So on the 4 hour chart, we see the same thing as the 1 hour chart. So clearly we're in an uptrend on a 1 hour and 4 hour chart. Then I go to the 4 hour chart, and I notice that price is above the cloud and above these two lines here on the 1 hour, on the daily chart. So I know that on the daily and the 4 hour chart, 1 hour chart, the yen crosses, Aussie yen is in an uptrend. Okay. So I scroll back down to 1 hour chart. Let me just remove the pivot point indicator. I just want to focus on one thing at a time. So notice these lines here. We have a blue line and we have this line, and when these two lines cross, it supports the directional bias. It's actually your trigger. So there's an entry right there. These two lines crossed, and there's an entry over here. So we want to be taking trades in the direction of the trend. So whenever these two lines cross and to the upside, that's our trigger to take a trade. Okay, and when the two lines cross to the downside on the 1 hour chart, that's really just a retracement. We're looking for directional bias. So the daily and the 4 hour chart, price is above this cloud, and we just wait for price to cross these lines, or these lines to cross, and that's our trigger to sell. Now, what if you're not at the computer when this happens? Then as long as price is these two lines crossing to the upside and price does not penetrate this blue line, which acts as a moving support line or a Fibonacci, it's like a moving Fibonacci tool, then we're okay. Then you should be taking trades. Like right now, I'm looking for a retracement. Stochastics is overbought. It's a little bit overbought right now, so I'm looking for the market to come back down for buying opportunities. And if it could come back down to this blue line, that would be a great support area. I start using my scalp system. So for example, here, market, we had 3 red candles followed by a green candles. It did dip below this blue line, but it recovered and turned around and went in the direction of the trend. And that's what you're looking for. You're looking for directional bias. Take trades, take in the direction of the trend, and that was a trade to take here. It's around 10 a.m. Eastern, and we have quite a few news events coming out in the next few days, so the markets are going to experience some volatility. So we've got to be very careful. And I took a few trades, but I've exited those trades because of that. But technically, what we're looking for is buying Aussie yen on dips. We don't necessarily want to be taking a trade up here. And why? Because the market's already put in 75, 80 pips. It's done its daily range. So this is not an ideal area to buy. It would be better to wait for the market to come back down, find support, and then buy. Also, stochastics indicator is overbought at these areas. Now, it may, in the next 2 hours, it may continue to go up, but it's not an ideal area to buy because the risk is too great. We're talking about 70 pip stop loss, which is not ideal. Okay. So again, price above the cloud, price above these two lines. When they cross to the upside, we know we're in an uptrend. And make sure you look at your daily and the 4-hour chart to make sure that they look identical. If they all mirror each other, we've got a very strong uptrend, which should continue for the rest of the week. So let's look at another pair. Same thing. This time I want to add the pivot point indicator. So we have price coming into a new trading day, price above the central pivot point, above the cloud. The two lines have crossed to the upside, signaling a buy signal here, but now it's sort of stalled out. It's getting very close to the London close, which is around 11 o'clock a.m. Eastern. So we'll see what happens. We'll start looking for any kind of a retracement. We're looking to buy. Now, tomorrow is Tuesday. Tuesdays are usually turnaround days, or retracement days. So hopefully the market will retrace tomorrow, and then we'll start looking for buying opportunities for Wednesday. So normally what the markets do is they take a direction, and then on Tuesday they go in the opposite direction, and then Wednesday they resume their trend. And that's what we're looking for. We're looking for a retracement to buy the USD yen, also the Aussie yen, Euro yen. A Euro yen is, let me see how many pips it's put in so far. Yes, Friday was 175 pips, and it's put in about 130. It hasn't put in its projected range, which was about 175. But it is Monday, and Mondays are not the easiest days to trade. But this today actually was, because the yen pairs are so weak, or rather the yen itself is so weak. So across the board, let's look at pound yen. Pound yen, again, above the central pivot point, above the cloud. The two lines are separated going up. So we're in an uptrend. Let's look at the 4-hour chart. Same thing, price is above the cloud, two lines separated going up. Let's look at the daily chart, and price is above the daily chart as well. But only problem is it's getting very close to a strong resistance level around 173.30. So if you are long on the pound yen, just be cautious, because it may just react to this level up here and head south, but then that will give us buying opportunities. Stochastics indicator is overbought. So that's how to read the Ichimoku indicator and use pivot point indicator to confirm that we are in an uptrend, because technically we take trades when price breaks above the central pivot point and then take profit at the end of the day. So if let's add the other days and notice that here on Friday the market was above the central pivot point, above the cloud, and there was, for that whole 24-hour period, the market was just in an uptrend. Then it retraced, not much of a retracement for Sunday to Monday, and price recovered and turned around and went north. So if you have any questions, please email me on this. It's quite simple. It's not visually, it's very easy to be able to scan several pairs, because you're just looking for the same thing. You're looking for price above the cloud on all time frames, the daily, the 4-hour, 1-hour chart. Then you're looking for entries. Okay, so the entry was here. There was an entry here on last Thursday, and then coming into a new trading day on Friday, the market was above the central pivot point, above the cloud on all time frames, and also today. But now there's a little bit of a pullback, and I'm looking forward for the market to come back down so we can buy at these levels down here. Okay, that's it for this tutorial. The next tutorial, we're going to focus on candlestick patterns. I didn't want to put those two together. I just want to separate them and just just to give you a preview, we just remove all these indicators and just be able to trade based on candlesticks. And that's what we're going to be focused on in the next tutorial. So thanks for watching. Hope everyone have a good trading week.